From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm David Moss from Fox 8 Cleveland, guest hosting the Financial Quarterback.
And I'm Jim Lineweaver, your financial quarterback since 1993.
Okay, inflation's a lot like compound interest, and if you're not careful, it can derail your retirement. So at the end of the show, we're going to ask you to join us at Lock Keepers, where a professional panel will help you with strategies for inflation and even a possible recession.
Yes, possibly. But Dave, you know who one of the most famous investors of all time was?
Maybe Warren Buffett.
You're right. You hit that right on the head. You know, he has a famous quote about how he got his wealth. So he said, in part, it came from lucky genes, which we wish we all had, but it also came from compound interest. And there's a lot of truth behind that last part.
So compound interest, that's when interest you earn in savings or investment accounts earns interest of its own. So I get the idea, but it sounds a little paint me a picture.
Okay, sure. Happy to. So compound interest really takes advantage of the previous gains to grow your money more. So let's give you an example. So let's say you had $6,000 and it was sitting in a savings account, and let's say hypothetically it could earn 7%. So after 1 year, you'd have $6,420. After 20 years, you'd have over $23,000. And at 40 years, you'd actually have almost $100,000.
So it sounds like a lot of great magic, and you got it figured out. So your savings balance would accelerate over time as you earn interest on increasingly larger balances. So how does this relate back to inflation then?
Well, unfortunately, inflation is like the opposite of compound interest. So instead of really helping have your money work more efficiently for you, it's actually going to work against you.
Okay, so let's say I had $10,000 in 1980, and I had it there, took care of it. How much should that be in today's purchasing power?
Well, you'd have to have over $36,000 to match that same purchasing power. So if you didn't invest anything and you were still sitting on that cash from 1980, you'd have lost $26,000 in purchasing power over that time.
So that means you have to account for both in your financial plan. If you're going to share those strategies during your dinner seminar at Lock Keepers, for a limited time, just 2 nights, only 2 nights, you're going to host a seminar at Lock Keepers where the food is great, but the seating is limited.
That's right, Dave. We have a panel of 4 professionals to discuss wealth planning from every angle: financial, tax, legal, and insurance. We're going to discuss these and other strategies to help you outpace inflation and help preserve and protect your wealth for the challenges ahead. So join us to learn how to identify the basic steps to protect your portfolio from a possible recession, why 10 of the last 11 federal rate hike cycles ended in a recession, and how to avoid 3 common mistakes in managing your retirement income, and much more.
Okay, so join Jim and his team for a complimentary dinner at Lock Keepers. And remember, it's May 30th and June 1st at 5:30 in Valley View. And seating is limited, and it's going to fill up quickly, so call us today or visit lineweaver.net to reserve your seat now. So here's Fox News Sunday.